Hello friends, welcome to my channel and thanks for watching this video and welcome to another session of USA weekly market report. And we have seen the last Friday was a complete shocker where the current Fed in the Jackson Hole symposium said that we are more concerned about inflation and there are some pain ahead, and the market has reacted in the similar manner. As you can see, 3%, 4% gone on both the indices, and this is, I would say, normal. Now the thing is, or I just want to set the tone of this session where it is no doubt on stock market, but there will be something which will go beyond the stock market. Okay, and we have to see, because August 2022 is near to an end, and we are just 2 months away from the midterm election. So going forward, things are not going to be as easy as it looks like. And remember that no doubt the stock market has reacted in a very negative manner, but the thing is, stock market is always a future discounting machine. So maybe some people will say that the correction has just started, some people will say no, it's not much. So it's like somewhere in the between, in the middle. Okay, because when stock market is a future discounting machine, it has discounted or probably discounted some of the impact of what has about to happen. Okay, and there are repercussions, there are indeed repercussions if they are continue to, or if the central bank Fed continue to focus on inflation going forward. So let us see what lies ahead. But before that, if you haven't yet subscribed my channel, just hit on the subscription button, also hit on the notification bell along with the all button to get my updated video notification. Now, the recent threat of this, I don't want to include geopolitics, but it has, now on the power plant, nuclear power plant, and things are going out of the hand one way or the another. So I wish or I pray for the peace as soon as possible. That's what I can say. Apart from that, winter is approaching. So I don't know why the news or anything related to that is not there, because Europe, if you have read it, otherwise it is all available in the international media, that the crisis has just started. Okay, winter is coming and the crisis has just started. Let us see, when you are saying that we will go to renewable energy, and because of whatever you want to call it as the current situation, you want to go to your traditional source of energy, coal and all those things, and you said that nobody else will do that, and now because of a certain situation you are doing that. So let us see how they are going to manage their energy crisis. At the same time, they are going to save the climate. So the both of these are not correlated with one another. Apart from that, no, there is no such news. So what we are going to do, let's jump into the stock market section and let us see what lies ahead. So here we are. Friday close was indeed very bad. Everything crushed like anything, including gold, because when interest rate goes higher, obviously each and everything impacted in a negative manner. Oil is steady at 90, 92, in between 90 and 100. Apart from that, because of this interest rate hike, the US 10-year yield has jumped above 3%. VIX has started increasing. It has just started increasing, mind you. And going forward, natural gas, and I have a similar kind of view on natural gas, because it's going to move further on the upside. I have individual videos on natural gas, and natural gas is something which is not going to come down easily. I'm not talking about Brent, but natural gas is a different thing, and because of the energy crisis, let's wait for 2 more months and you will see what's going to happen over here. And you know it's very I would say risky to see these kind of moves in bond yield, because the near term bond yield has increased and the 30-year bond yield has fallen, which simply means that the near term risk is higher. As you can see, I just focus on 3 month and 30-year. Okay, meanwhile 1 year is greater than 30-year, 2 year is greater than 30-year, 5 year is greater than 30-year. So there are only two, US 10-year and US 3 month. These two, tenure, or the interest rate of these two tenure is less than the 30-year yield, and hopefully things will not go haywire, but we have to see. And the most important thing is US dollar index, which is strong and steady. And this is not only about this US dollar index. If it is going beyond a certain level, it will not only create problem for US economies, because they now have lots of debt, and people start losing jobs beyond a certain point. It doesn't matter how strong the economy looks like, because there are other things which are not working. But at the same time, a strong dollar makes other countries nervous, and we have seen lots and lots of countries are now going into their local currency trade. So dollar going beyond a certain point is definitely not going to work out. And stock market, obviously, most of the things are dollar denominated, but the problem here is stock market will not react. I'm not talking about the US market, because it has a direct impact of dollar across the globe. But when slowly but steadily other countries will uh, you know move out from the dollar trade, and they will start trading on their local currencies, then things will change, and dollar does not have any impact on other economies compared to US market. This is on the long term. I'm not talking about what will happen tomorrow or day after tomorrow, but this is what's going to happen beyond a certain point. So dollar beyond a certain point uh, not only creates a problem for stock market, but also for the US economy as well. Now, looking at the trend, it has made its high at 108 or more, and it has fallen to 105, but it is now trading at 108.8, closed at 108.8. So obviously the next two levels will be 119 and 122. Now let me tell you, this is not at all good, but stock market is very stable, because last time when it does happen, we have seen a severe crisis. We have literally seen stock market going haywire in 2001 2002, because that time Y2K crash has happened. But now we do make ourselves ready for some more correction. But the thing is, previously these kind of moves in currency will definitely take time, but now currency and equities are moved in a similar manner. I won't be surprised if $120 move happens in a week. it won't surprise me. Yes, stock market will be impacted negatively, but the move will be fast and swift. And these are trading bets. These are simply trading bets. Otherwise, currency can't move like this. But anyways, things are not looking good as far as dollar index is concerned. Now, moving back to Dow Jones, because after a very long time, Dow Jones has literally moved a lot. 1000 point is not at all a joke. So Dow Jones has made its move. Now I know I don't want to be a bearish guy right now, but levels are fixed. What I'm going to focus on is the recent low, nothing more than that right now, because looking at the market, as I told you, stock market is always a future discounting machine. It would have fallen by if Fed is saying that we are going to be much more hawkish and we are going to increase the interest rate, then obviously stock market would have fallen much more than it looks. I am not saying that it won't go it won't go lower in the upcoming sessions, but the fall is normal. The fall is not like 5 or 6%, it is 3.5%. Maybe in the upcoming session it will fall down, but if it has to happen, it will happen in the single trading day or on the last Friday. Now, as far as the levels are concerned, I am much more focused on the recent support levels: 32,000, 30,000 and 29,663. And apart from that, if you are looking at NASDAQ, because NASDAQ will always reacted badly, because the beta is remains high for the NASDAQ, and the same logic applies over here. I will be negative, but not beyond a certain point, so I don't want to go below the previous lows. So the levels that we are going to look at in NASDAQ, we have 4 support levels, starting with 12,087, then we have 11,717, then we have 11,134, and then 10,607. So this is what we have as far as NASDAQ is concerned, right? So we are negative, but as I told you, not beyond a certain point. Looking at gold, I'll tell you that I don't know who is thinking what, but if you are looking at gold future, it is taking its time for consolidation. That's what I can say. Maybe it's not moving beyond a certain point, but I would say that if you just accumulate gold near to the support level, because this is giving you multiple opportunities in between 1670 and 1700. If you accumulate gold, here we are. So if you accumulate in between these levels, so over a period of time, because there are multiple instruments which will come into play, but over a period of time you will get some steady returns as far as gold is concerned. Maybe the time has not yet come for the gold futures, otherwise it would have moved much faster, much higher in the upcoming sessions. But anyways, we have a support in between 1676 and 1700, and that's where you will find your big support as far as gold future is indeed concerned. Let us look at natural gas, because natural gas is something which will create havoc in the upcoming session. So I just go and check this is the monthly chart, and looking at the current dynamics, you do whatever you want to do, but beyond a certain point things not work, more specifically in Europe. And that's why it is normal to say that going forward natural gas will definitely sell at premium rather than at discount. So the next couple of targets will be as follows. So this is natural gas futures chart. So you have 10.3, you have 12.26, you have 13.7, and you have 16.26. This is what we have as far as the trend is concerned for natural gas going forward. Apart from that, US 10-year yield. So US 10-year yield, as you can see, it has started falling, but after the statement, or after Fed Chairman Jerome Powell said in the Jackson Hole Symposium, it has started moving higher. But this time we will see whether it will move beyond 3.29 or 3.3, because it looks like a cap. So this is going to be a wait and watch situation as far as the upper end of the range is concerned, right? US 10-year yield is going to be a wait and watch situation in between 3.16 and 3.29. You know, if the market is bad, you will get a sense of it. You will literally smell it. If you know the stock market, if you have some experience in the stock market, you will literally sense that there is something bad which is coming. But as of now, there is nothing like that, irrespective of the situation that is currently prevailing, where we know, or the market knows, that this is not going to boil down very easily in the upcoming sessions or in the upcoming days. But it does not look very bad as of now. If there is something, we have to change our view accordingly. There is no doubt about it. But market is not reacting the way it should in a crisis situation. So let us see what's going to happen. Next week is probably be on the lower side, but the main focus on the US dollar index. And as we are approaching the midterm election, things will get very, very interesting, and we have to see how stock market will perceive it in the upcoming days, weeks and months. So this is the end of the video. Thanks for watching.